So, welcome back, dear students. In yesterday's session, we have learned how to do the solution for admission of a partner when the new partner brings goodwill in cash. That was the first case of goodwill we have learned. Now, today I am going to teach you the second case of goodwill, that is when the new partner brings the goodwill in cash, but it is withdrawn by old partners. In the sense, whatever share of partner goodwill the partner gets, they are going to withdraw. So, today we are going to see the problem number 7 of your textbook, which is of goodwill withdrawn case. So, as usual, I have prepared the accounts which are needed: general reserve account, cash account, goodwill account, revaluation account, partners capital account, and the balance sheet here. Now, if you look at the balance sheet, you come across various assets and liabilities and few adjustments. If you see, Balu brings 75,000 capital and 40,000 goodwill. If you look at the second adjustment, they are telling the amount of goodwill is withdrawn by old partners. Yesterday, just we distributed goodwill. Today also we are distributing the goodwill, but they are going to withdraw. So already in the basic classes, I taught you the journal entry and all for goodwill withdrawn. That we are going to see in the cash account again. Then as usual, building is appreciated, furniture stock are depreciated, and the last adjustment, if you see, they say there is an unrecorded liability in respect of workman compensation. Unrecorded liability. While teaching you the entries for revaluation, I taught you unrecorded asset and liability. So here we'll see when there is unrecorded liability, how we are going to post. So Ganesh and Sankar are sharing profit and losses in 3:2 ratio. That is in the working. I'll write for you all Ganesh is to Shankar 3:2. 3/5, 2/5. Now we'll start posting. Asset number 1 is cash. So I'll go to cash account. I'll bring down the balance. To balance brought down 40,000. Then bills receivable is an asset. So simply we'll put in asset. There is no adjustment. So bills receivable amount 45,000. Then sundry debtors. Sundry debtors, they have got adjustment. So I'll put in inner column 90,000. Leaving some gap. Stock. Even on sundry debtors, there is no adjustment here. So you can write in outer column 90,000. Then stock. Stock carries adjustment. So inner column 80,000. Followed by furniture. Furniture has an adjustment. Amount 50,000. Building has an adjustment 1 lakh. Inner column. Very simple. Then liabilities. Creditors. There is no hard and fast. Creditors 50,000. Bills payable. It is just the subject called cut, copy and paste. 60,000. Bank loan is a liability. So bank loan as it is 40,000. Then general reserve. So in general reserve account, by balance brought down, amount is 30,000. Then partners capital. So by balance brought down, Ganesh capital is 1,50,000 and here 75,000. So all our postings are done. Within no time, we will be able to do the postings. Now comes the adjustments. So if you look at the adjustments, they said Balu is bringing 75,000 for capital. So already I taught you the journal entry for capital brought in. So cash account debit to Balu capital. So Balu brought 75,000. So here again second effect in Balu's capital by cash he brought 75,000. Then along with 75,000 capital dear he brought goodwill. So again cash account to goodwill and the amount is 40,000. So in goodwill account by cash 40,000. Now immediately this goodwill is to be distributed between old partners Ganesh and Shankar. So here we are doing working goodwill. How much is goodwill? 40,000. Now this 40,000 we are dividing by 5. 5 8s are 40. So we are getting a quotient of 8,000. So Ganesh share is 8,000 into 3, 24,000, and Shankar 8,000 into 2, 16,000. So 24, 16, 40 we got here. So we'll go to goodwill account to Shankar first, to Ganesh. So first to Ganesh capital, Ganesh got 24,000, then to Shankar 16,000, and the goodwill is closed with 40,000 both the sides dear. Second effect will give goodwill to the partners. So by goodwill, Ganesh got share 24 and he got 16. Now if we look at the next adjustment, very important adjustment, that is the theme of the problem. They say that this 24,000 and 16,000 which is goodwill is withdrawn by Ganesh and Shankar. So how the goodwill is withdrawn? It will be withdrawn in the form of cash. So debit the receiver. Ganesh and Shankar are the receiver. So they will receive their share of goodwill in form of cash. So debit side to cash. Keep in mind, Ganesh share was 24 and Shankar was 16. So in cash account, credit side by Ganesh 24,000, by Shankar has withdrawn 16,000. This is goodwill withdrawn here. Now the next adjustments. The next adjustment, building is appreciated by 20%. So building 1 lakh 20% if we do, it comes to 20,000. So I'll add to building 20,000. Add appreciation at the rate of 20%. So 20,000 added, building is 1 lakh 20,000. So increase in value of building. So by building, revaluation credit side 20,000. Like that, if you see, furniture and stock are depreciated by 5%. So stock 80,000. 80,000 means 80,000 into 5 by 100 if we cancel the zeros, 800 is left. So orally also if you do the calculation, 8 5s are 40. In the sense 4,000 is stock written off. So minus written off 4,000. So 76,000 is the answer. This will go to revaluation, debit side, to stock 4,000. Like that, furniture minus depreciation at 5%. 5 5s are 25. 2,500. 47,500. Again, to furniture 2,500. Then if you see, they say that there was an unrecorded liability. What is the name of the unrecorded liability here? It is workman compensation. So liability is increasing. When liability is increasing, we have to post it onto the revaluation account debit side, and in the new balance sheet we'll put as liability. So I'm going to revaluation to workman compensation. How much is the workman compensation given to us? They say it is 3,000. Second effect, I am showing in the balance sheet as a liability. Workman compensation, 3,000. Like this, all the postings are done, dear. Now, as I told you, we have to balance one account. General reserve, it should be distributed. So 30,000, if you divide by the ratio 3:2, you get 5. So first I'll find the quotient and do the distribution. So look here, general reserve is 30,000. Now I'll find the quotient. 30,000 divided by 5. 5 6 are 30. So I get a quotient of 6,000. So I'll do Ganesh share 6,000 into 3. 18,000. Then Shankar 6,000 into 2. 6 2s are 12. Again you can cross check. 18 plus 12, 30,000. So first general reserve. 2 Ganesh capital, 2 Shankar capital. Ganesh got the share of 18,000 and 12,000. Close the account with 30,000. Now this will post here by general reserve 18,000 and 12,000. Then we have cash account. Better we'll do the balance of cash account because we have debit and credit here. So cash, debit total. How much is debit total? 40,000, 75,000 and again 40,000. So 0, 0, 0, 5, 7, 4, 11, 15, 1,55,000. If I see credit, 24,000 and 16,000. Total 40,000. Now I'll see the balance. 1,55,000 minus 40. 0, 0, 0, 5, 1, 1. 1,15,000 is the balance. So I have a cash balance of 1,15,000. So in cash account, by balance carried down 1,15,000. Close the cash account. Both the sides, higher amount, 1,55,000, 1,55,000. Better will bring the balance. To balance brought down 1,15,000. So new cash is 1,15,000. I'm transferring to asset 1,15,000 here. So cash is closed, goodwill is over. Now revaluation. So again working for revaluation. Let us do debit total. If I write the debit figures, 4,000, 2,500 and 3,000. The total is 4 plus 2, 6 plus 3, 9,500. And credit, if we see, it is 20,000. So 20,000. Again, credit is more, 20,000. Debit is less, 9,500. 0, 0, 5, 0, 1. 10,500 is the profit. Again, this 10,500 will be divided by 5. You know the quotient. Divided by 5. 5 2s are 10. 5 brought 1. 5 1s are 5, 0. 2 zeros. 2,100. Now again I'll do the share of Ganesh. 2,100 into 3, 6,300. Shankar, 2,100 into 2, 4,200. Cross check. 3 plus 2, 5. 6 plus 4, 10. 10,500 here. So profit will be posted to revaluation account first. So to Ganesh capital. How much we got for Ganesh? 6,300. To Shankar capital, we got 4,200. So the account is closed with 20,000. 20. So posting. By revaluation profit 6,300 and 4,200. So all the 4 accounts are closed. Now we have to close partners capital. Here we have credit as well as debit here. So first we'll do the working. So Ganesh capital. No doubt it takes 2 minutes time, but it's better. So credit 1,50,000, 24,000, 18,000, 6,300. 003, 18, 5 plus 2, 7, 8, 9, 1,98,300 is the credit total. From this, I'll subtract debit 24,000. 003, 8, 4, 4, 9 minus 2, 7, 1. This is the new balance of Ganesh. Like that, we'll do for Shankar. Shankar. Again, I'm writing credit figures of Shankar. 75,000, 16,000, 12,000 and 4,200. 002, 4 plus 2, 6, 6, 6, 12. 12 plus 5, 17. 7, 8, 9, 10. So it comes to 1,07,200. From that again I'll minus 16,000. 002, 7 minus 6, 1, 10 minus 1, 9. This is the balance of Shankar. And of course, new partner Balu is 75,000, nothing to worry. So here, 2 balance carried down carefully. 1,74,300, 91,200 and 75. Dear students, this balance should be posted in the balance sheet. So new Ganesh capital. Don't write the total. We'll write balance. 1,74,300. Then Shankar. Generally, the students, they commit mistake of writing the total. No, we are supposed to write the balance. Keep in mind. And Balu. If we see Balu, 75,000. Now, you can close the partner's account with the total. Shankar, Ganesh is 1,98,300, 1,98,300. 1,07,200, 1,07,200, 75,000 and here 75. Always good. Bring down the balance. New capital. By balance brought down. 1,74,300, 91,200 and 75,000. So even partners is over. Now the last part, balance sheet, assets total, liabilities total. That also you can do the working. Balance sheet, liability, asset. 100% it is going to tally here. So chalk out the figures. 50,000, 60,000, 40,000, then 3,000. Maintain the discipline of writing the decimals. Then 1,74,300, 91,200 and 75,000. 0, 3 plus 2, 5. 10, 13, 3, 1 carried. 10, 7, 24. 24 plus 4, 28. 28, 34, 39, 9, 4. 4,93,500. Now let us see assets total. 45,000, 90,000, 76,000, 47,500. Sorry. Then 1,20,000, 1,15,000. So 0, 5. Again check the total. 5 plus 7, 12, 12 plus 6, 18, 18 plus 5, 23. So 2 carried. 3, 4, 5, 9, 9 plus 6, 9 plus 7, 16, 16 plus 4, 20, 20, 29, 9, 2 carried, 4. So 4,93,500 is your balance sheet total, dear. Like that, 100% your answer will be correct. Both the sides, 4,93,500, 4,93,500. Like that, if you follow the technique, even in exam, whenever you are asked to do partnership question, better take a pin page, two-sided page, and in the first page, try to draft 4 accounts. In the second page, half page will be enough to do your partner's capital balance sheet, and below, like, you can use for all the working notes, and this will give you a 100% correct solution. So once again, if there is any accumulated profit, that will be account number 1, dear students. And always in that, you bring down the balance by balance brought down. Always. Then that will be distributed. Then cash account. Then goodwill account. Then revaluation account. Partners capital and balance sheet. Now you all may have a doubt, sir, can we change the sequence of accounts? It's up to you. But if you follow this procedure, 100% your postings will be amicably done and you will be able to get your answer in a better manner. So, hope you have understood the concept and the presentation when goodwill is withdrawn. When goodwill is withdrawn, credit side. Brought goodwill, debit side. Like that, I have tried my level best to explain you with different colors, different pattern and all here. So, based on this pattern, you can practice 1 or 2 problems more from your textbook. In the next session, I am going to show you the third part of the goodwill, that is goodwill valued. Okay? That's all. Yes, dear. So, this was the next case of goodwill, right? In the first case, I have explained you goodwill brought in cash, right? And retained in business. In this session, I explained you goodwill was brought in cash and it was withdrawn by the partners, right? Now comes the third case. In this session, I'll explain the concept and next session, I'll teach you the problem, dear. So, the third case is also important. Generally, first case and third case, they may ask you in exam. So, third case, they say that when goodwill is valued, goodwill is valued. Keep in mind, there are different names which are used. One is valued, one is raised, or one they may say created. So, whenever they say these 3 words, valued, raised, or created, that time how you are going to do the goodwill and why the situation comes. In these 2 sessions, we saw that like new partner Balu, he brought the goodwill in cash, but sometimes he may not be able to bring the goodwill. He will say, I can bring only capital, but I cannot bring the goodwill. In that case, what the old partners will do? The old partners will just find out their value of goodwill. In the sense, how much is their reputation? How much is their good name, fame? And based on that, they will find out the value of goodwill. So, sir, on what basis they'll find out? In the goodwill chapter, I taught you that based on the average profit, super profit, like that, they'll find the goodwill. So, in one word, based on the profits, they will determine the value of goodwill, dear. That goodwill we have to bring in the books of accounts. Okay. Here he brought the cash, but now he's not going to bring the cash. So they will value. What are the 3 words? Goodwill is valued, goodwill is raised, and goodwill is created. So whenever the new partner brings goodwill, he's not able to bring goodwill, we'll value the goodwill. So what we'll do? That valued goodwill will be just distributed among the old partners. One effect. It should be distributed among old partners. And second, as it is an intangible asset. It is an intangible asset, dear. So we are going to show that goodwill in the balance sheet. Okay. We are going to show that in the balance sheet. As I told you the rule also, actually putting goodwill in balance sheet is not correct. But since our syllabus is modulated like that, we'll put goodwill in the balance sheet asset side. That I'm going to show you in the next session, how that goodwill is valued. So whenever the goodwill is valued, keep in mind two important words. One, it should be distributed among partners, and whatever balance we get, that we are going to post in the balance sheet asset side. So in the next session, again, keep your textbooks ready when you join the class. Keep the textbook so that we can do the posting simultaneously. Okay. Hope you have understood this solution. Practice well, dear, because this is 20 marks question, life-giving question. Those who want to clear intermediate second year with good marks, those who know chapter called partnership, non-trading concern, consignment and depreciation, I say that you will be the masters. So please focus on these chapters mainly and especially on partnership. I hope whatever I am explaining you are able to follow. Practice in the same manner. Have a nice day. Have a good day. We'll meet you in the next session tomorrow with goodwill, valued, raised and created. Have a nice day, dear students. Thank you.